All right, again, folks, welcome to 2026. For me, this is the first real trading day. Friday was cute. Today is real. Investors obviously are also excited. Look at this. Talk about green across the screen. These are all your sizes, all your factors. Everything is up, but look at mid and small caps. They're absolutely killing it. By the way, quality small caps really crushing it, mid caps as well. So this is really where the action is, right? And it brings me to the sort of heart of the matter when it comes to small caps, because we saw so many false starts for them last year. Of course, we know 40% of the Russell 2000 is unprofitable, and that makes a lot of these metrics really tough to understand, right? Your net debt to cash flow, 3 times the Russell, just 1.6 for the S&P. Same thing across the board. No matter how you measure it, it looks like these stocks are expensive. But my next guest says, here's the trick. Focus on profitable small caps. So let's bring in now Palisade's Capital Managing Management CIO, Dan Veru. And I'm sorry, Dan, but let's just talk about price to earnings for profitable Russell stocks, 15.8 times, S&P 22.2 times, of course the Mag 7 over 31 times. This is the key here, really, right. Look at the profitable small techs.
You're in a deregulating environment right now. That's going to be a tailwind and allow more M&A consolidation. There's a lot of companies that do something special within the small cap space. That's why taking an active approach and looking at it security by security versus just owning the index, because as you've rightfully pointed out, the index doesn't tell the story. Right.
And by the way, I'm a stock picker anyway. I believe in finding great companies because that's how you can outperform the market. Let's start macro, though, because drivers for the overall small cap, monetary landscape, more rate cuts, the better for small caps.
That's right. It's not just rate cuts. We've ended quantitative tightening. So now the Fed's balance sheet is going to be stable to perhaps expanding modestly. Because every time you tighten, every time you shrink the balance sheet, all those reserves come off of bank balance sheets. They have less money to lend out.
One big, beautiful bill. All those provisions kick in this year, help small caps.
Think about it from this point of view. You've got 100% bonus depreciation spending on CapEx, but for the first time ever, you're getting depreciation at 100% to build a new plant and the land cost. We've never done that before.
Regulatory regulation reform doesn't get a lot of press, but this is really critical, isn't it?
It's another tax cut. It's really a big tailwind. It particularly favors the banks, and that's why I think you're going to see small cap banks, which historically have traded at a premium to large caps, but are at a nice discount.
Now, you also said the AI story is just not about large caps. There's a small cap area as well. These are 3 names that you like. Let's just kind of go through them kind of quickly, because you also have some other names for 2026, beginning with the MYR Group.
Yeah, so they're building data centers. So they're going to see a huge tailwind from that. Mueller Industries makes the piping and tubing that goes to cool those data centers, and Semtech makes a lot of the semiconductors that go into a lot of the things that are happening.
And these are your targets: 265 for MYR Mueller, 135 Mueller, and of course Semtech 85. Let's talk about your ideas for this year. I like Warby Parker. I've got some folks in this one as well. Why do you like it?
Yeah, I mean, they offer a really great experience if you're looking for fashion optical at a reasonable price. There is some sizzle with that, too, because they're partnered with Google on AI glasses as well.
Yeah. Renaissance?
Renaissance, yeah. So that's a regional bank, and they're in a region of the country where there's been consolidation among other banks. So there could be some disruption of some of their competitors, which could be a real opportunity for Renaissance, and it's trading at a very inexpensive valuation.
And Repligen, this name goes back a ways, though, right? It feels like one of those old hot biotech names, but biotech has undercover been hot recently as well.
So this is a company that services the biotech industry. My partner, Don Brock's done excellent work on Repligen. This is a great growth opportunity, and you get the tailwinds of the biotech space without the binary outcomes of trying to pick and choose a particular drug target that may or may not get approved.
So before I let you go, essentially we can see from today, there's a sense that, okay, maybe the market does well this year. A central focus is what hasn't necessarily performed, but also a certain comfort level, right? Quality small cap names, companies that are making money and have proven track records.
When you're in the basement, it's tough to break your leg when you fall out of a window. Valuations are low, and from here, you have much better risk reward with profitable.
Well, let's break a leg the old-fashioned way, make some money too.
Pleasure.
Great
Thanks,
stuff,
Charles.
Dan. Appreciate it.